Crypto and UK tax, what you need to know in 2025. Cryptocurrencies used to be something only a few people invested in, seen as high risk, volatile, and definitely not something institutional investors would go near. But in 2025, that's changed. With Bitcoin ETFs now approved and more liquidity flowing into the market, crypto has seen widespread adoption. And not just from niche investors, but from traditional institutional investors and retail investors too. And as expected, HMRC is watching very closely. They've published detailed guidance on how crypto is taxed, and it's an area that's very much on their radar. There's still a lot of confusion. Does crypto count as income or capital? Is it taxed when you swap coins? What happens if it just sits on an exchange? The rules aren't always intuitive, but HMRC has made their position increasingly clear. If you're new here, I'm Abbas, a chartered accountant and chartered tax advisor. I trade in one of the private client teams at one of the big 4 firms, and I now work with individuals and business owners on complex tax matters, including residence, inheritance tax, business structuring, and increasingly cryptocurrency. In this video, I'll break down how crypto is taxed in the UK, what the key rules are, and a few areas that you might want to think about, especially if you've bought, sold, or received crypto in any form. Now, the first thing to understand is that crypto isn't taxed based on what the asset is, it's taxed based on what you're doing with it. If you're holding crypto as an investment, say you bought some Ethereum, let it sit, and then sold it for a profit, that's generally treated as a capital gain. In some cases, depending on the scale and frequency of your trading, HMRC might argue that you're operating more like a business, and in that case, the profits could be subject to income tax rather than CGT. Now, in practice, this is rare, but it's something to be aware of. For most people, crypto will be subject to capital gains tax. The key moment for tax is when you dispose of your crypto, and that doesn't mean cashing out to fiat or withdrawing from the exchange. A disposal happens when you sell crypto for cash, exchange one crypto for another, convert to a stablecoin like USDT or USDC, use it to buy goods or services, or gift it to someone other than your spouse or civil partner. It doesn't matter whether the money stays on the exchange or comes off. If you've disposed of a crypto asset, that's a chargeable event for tax purposes. Your capital gain is the difference between what you sold it for and what you bought it for after deducting any exchange or transaction fees. Now, if you've bought the same coin multiple times at different prices, HMRC uses something called a Section 104 pool, essentially averaging your cost per unit to calculate your base cost. The resulting gain is taxed at 18% for basic rate taxpayers and 24% for higher and additional rate taxpayers. You also have a £3,000 CGT allowance for 2025-26, so the first £3,000 of gains are tax-free, which can be helpful for planning. One thing I get asked a lot is whether the gains are tax-free if you hold crypto for more than a year. I think this is a confusion with one of the US rules. In the States, they have different rates of capital gains tax in the short term and long term, but in the UK, there's no such thing. Whether you hold crypto for 2 weeks or 2 years, the rate is the same, and this doesn't affect your CGT. Now, so just to emphasize, swapping ETH for SOL, for example, is a disposal, and you don't need to convert that to GBP for the tax to hit. Not all crypto activity is investment-based. If you've received crypto through mining, staking, airdrops, or as payment, then you might be in income tax territory. HMRC's view is that mining rewards are taxable as income, especially if you're doing it commercially or for a profit. Staking rewards are also taxable if you're providing a service in exchange. Airdrops are a bit more nuanced. If you did something to receive them, even just signing up to a platform, then HMRC might treat them as income. But if the airdrop was genuinely unsolicited, then it's treated as capital, although your base cost in this case would be 0, which means that the whole amount is taxable on disposal at CGT rates. And if you're paid in crypto as a contractor or an employee, it's taxed as earnings, subject to PAYE or self-assessment in the usual way. The taxable amount is the fair market value in GBP terms at the time you receive the asset. If you hold it and it appreciates, that additional growth will be taxed under CGT rules later when you dispose of it. So with institutional adoption has come more regulation, and HMRC is paying attention. UK-based exchanges like Coinbase and Binance are required to share data, and HMRC has already received user data and transactions from several platforms. Last year, they sent thousands of nudge letters to individuals they suspected of having undeclared crypto transactions. And from 2026, it's going global. Under the crypto asset reporting framework, exchanges from around the world will start automatically reporting user data to tax authorities, including HMRC. So if you think crypto is anonymous or off-grid, it's really not. HMRC already has the tools, and the level of enforcement is only going to increase from here. So if you've been involved in crypto, whether as an investor, trader, or earning crypto through rewards or work, now is the time to take stock. Ask yourself, Have I made any disposals that I haven't reported? Have I received crypto that should have been declared as income? Do I have good records with dates, transaction values, and GBP values? Because ultimately, the burden of proof is on you. If HMRC believes that you've made gains and you don't have records to prove otherwise, it can be difficult to argue your case. Good record keeping is crucial, and it's no longer optional for crypto. Crypto remains a fast-moving space, but the tax rules are now fairly well established. If you're unsure where you stand, or if you've got years of unreported activity, the earlier you deal with it, the better. We work with clients to help them understand their exposure, stay compliant, and put plans in place that fit within their wider tax strategy. If this is something you're thinking about, feel free to reach out or speak to your advisor sooner rather than later. If you found this video helpful, then give it a like and hit the subscribe button. It helps this channel more than you know. If you have any comments, questions, or if there's any topics that you'd like me to cover next, drop them in the comment section below. That's all for this video. Thanks for watching.